The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento. Larry Pesavento.
Good afternoon, folks. This is the Commodity Show, but I want to start out with stocks because we had something really significant happen today, in my opinion. I've posted the New York Stock Exchange Index into the Tiger TV so you can take a look at it. Today's low was an exact 61% retracement to the exact tick from the low we made on March 13th. That's the key date that Mr. Ehrman talked about when he was on from Ehrmanometry last week. And by the way, we're going to have a very special guest on at the half hour. My co-author of the new book on astrology, Shane Smillian, will be our guest, and he'll be sharing some of the research that he does. And he's certainly on top of this very closely, so we'll have him on at 12:30. Getting back to the market. Now, the New York Stock Exchange Index went to the 61% retracement. The NASDAQ made a new low below the March 13th low. The Dow Jones Industrial made a new low by just a few points below the March 13th low. And the S&P 500 almost matched it. It came within 2 points of actually doing. This is a perfect example of how those 531 stocks, the 500 stocks in the S&P 500, the NASDAQ, and then the stocks of the 30 Dow stocks, how all those are controlling what's really happening in the market. The real market is that New York Stock Exchange Index, and that's the one that really tells what's happening, in my opinion. This is a really perfect example of that, in my opinion. You had the Dow down about 170 points, I believe, sometime in the middle of the night based on conflicts in Saudi Arabia and Yemen. However that affect us, I have no idea, but probably other things were happening. But this is the kind of market where it's really 531 stocks. It's controlling the whole thing. It's just really amazing. The overall market is the New York Stock Exchange Index, and it's below where it was in July. That's all I can say. We're getting ready for something big. I don't know if we've got another month to go yet to the upside, but if we close below those lows of March, let's try it again, Larry, March 13th, that is really going to be bad. The fact that we hit it overnight is no big deal because the real stock market only made it to the 61% retracement. That's the NYSE index. So I want to make a really strong case for this because this is a really important date, and we've already tagged it on those 531 stocks, but that was overnight, and not many of those people in Boston and Wall Street and those other places Philadelphia do a lot of overnight trading, so we want to watch that very, very closely. Now, I would like to share with you, I want to show you a pattern that we talked about last week when we were doing our commodity show, and that was the potential island reversal that we were having on the wheat chart. And we gapped up on that Sunday night of the 22nd of, actually 23rd of March. Let's try it again, 22nd of March, and then we've gapped down, and as you can see, we're breaking badly now. We're down over 30 cents a bushel in the wheat, from that island reversal level that was up near the 786 retracement. So island reversals are very rare, but when you do see them, they are extremely important. They are one of the more powerful of the candlestick patterns that you can or any technical pattern. It's not just candlestick. An island reversal could be either a bar chart or a candlestick. It doesn't really make too much difference from that. Now, when I left you on Wednesday, we were talking about the notes, the 10-year notes, and we were watching for that 61% retracement to form and the potential for that shooting star to complete. And in fact, we have completed that shooting star in the Treasury notes, and we've already dropped almost $1,000 down from the high. So this tells us that we are heading lower in the notes, which means we're looking at higher interest rates and not lower interest rates. On this note chart, I have 4 examples marking off that shooting star pattern, and as you can see, each one of those led to a substantial decline. What's interesting about the one that we had yesterday was the fact that it was coming in at a 61% retracement after a 13-day rally. That's the highlight of that particular chart that I think is extremely interesting. So we'll just keep an eye on where it goes from here. But we should have some strong support down about 1.5 points. Down around the 127.08 level, which is the 61% retracement of that 13-day up move that carried it from 125 and change up to the 129 and change. So we'd be looking for about a retracement of 3 points, which would take us down to 127.08 in the notes. Going below that, then you've set up some much higher interest rates. I know it's impossible to think that interest rates could possibly go higher, given the fact that we have quantitative easing across every place in the world, with the exception of Bangladesh, and I'm not sure they've met yet about it. But who knows? This is just a chart pattern. Whether it works or not, we'll have to wait and see. The next one that I wanted to cover here is the gold market, because the gold market has finally raised its head. We've had a really good rally here. I'm going to bring this chart in here so we can take a look at it. We've almost made a 50% retracement of the move. I thought it was going to hold that 1200 level, and it didn't. So I gave up the ghost at 1202. We're now trading at 1205. We almost hit that magic number of 1222, which was the 50% retracement of the whole move down from this year, starting in the middle of January. And now we have to see what this correction is going to be, if in fact this is going to be the correction. We're down around we're down $16 from the high today, which is a good sign. But we have some strong support coming in, I believe, in the gold, somewhere around the area of the 61% retracement, which would come in around the 1170 area. That's what it looks like from my perspective here in the gold. The gold index and the bull bear index in gold really didn't do very much, so I can't see much help from those. Just we need to watch the correction. We were up 10 days now in the gold market, and it's very unusual for the market to go more than, well, you can imagine, Treasury notes went 13, so there's no magical formula for it, but usually anything after 8 days, you're ready to have a correction. Well, the notes went 13 days, gold's gone 10 days, so gold could still go up a few more days, but we will have a correction in here, and we really need to get ready to buy it when it comes back. I've been long gold for a while up until yesterday. Now I'm a sold out bull, which is a very tough situation to be in, but I do want to buy it again. It's a question of how much am I going to get a correction to look at it. Like I say, I'd love to be able to buy it at around 1170. That's where I bought it the first time. Well, first time I bought it 1147, but then the second time was 1170, and then I'd look to do it again at the 61% retracement that comes in at 1170. I would certainly like to do that one. Now we have another little classroom thing to look at here today, folks, and that is the silver. Silver is very, very interesting because we had a phenomenon that you don't see very often, except we saw it just a little while ago. And I'm going to mark this so we can see it, because we have the same pattern going on now that we had in the Treasury notes. If you give me a second here, I'll bring this up to let you take a look at it, and you're going to see the chart, a daily chart of silver. And as you can see, we have the potential for that shooting star pattern that's marked there in the red circle. In other words, the market ran up to the 61% retracement, went about 7 or 8 cents above it, and now we're trading 20 cents lower than the high. And like like we mentioned yesterday in the notes, if they close below 129 even, and they closed below that by quite a bit, that will set up this potential shooting star, and that means that we are, in fact, getting ready to head lower in the silver market. So this is a very interesting one because of the fact of where we stand here. We have to follow through with this one on Monday, folks, because this could be the real tip-off here of what's going to happen to silver over the next 5 or 6 weeks, because we've had a run from the 13th of March up until today, several weeks now. Around 11, it's been 13 days, and now we look for a little pullback here in silver, hopefully down to around the $16 per ounce level, where I would be looking to be a buyer. I recommend it to any of our listeners that are out there that does not own any physical silver or gold, to try to buy some. You can buy them at either pawn shops, which they charge a little too high a price, but if you go to a coin dealer, you can buy really nice silver dollars for about 20 bucks, which contain 1 ounce of silver. So they're probably even under 20 bucks right now. They'll be about 20 bucks. They don't go much under that. And at least you'll have some, protection if, in fact, this market ever does explode to the upside. Because I think that quantitative easing, when they start to try to pay the bills, the people that own the paper might want real money, but I don't know. All I can tell you is this chart doesn't look as bad as everybody's talking about. It's ready for a correction right now, but it's not nearly as bad is what it looks like on the charts of today. That's the main thing. Silver made the 61% retracement. Gold could not quite make the 50% retracement. It missed it by about $6. So silver has been a little more bullish in this time frame here. The problem is we're not getting any help from open interest or the volume. There's just no change in that. It doesn't change at all. There's no new bulls, no new bears. So it's just a continuous rollover of people. So we need an influx of open interest, more people coming in either to buy or sell. That's what we really need, is a big influx of open interest to tell us that somebody's pulled out their wallet and said, let's make a bet. And that's not happening yet. And when that happens, we certainly want to do that. This is what happened when we were making our high back in April of 2012. We had that situation where silver was $49 an ounce and open interest was dropping like crazy and the prices were going up. And that's short covering. That's as clear as a bell. And once that short covering is over, there's a vacuum for buyers and boom, down goes prices. So what we need to do is the opposite to occur, to see the prices spike up with a big increase in open interest. And that tells us these people are here to stay and you're probably going to go a great deal higher. That's what it looks like in the silver market, from my opinion. But this potential silver shooting star that we have is really a very interesting pattern, because we've seen it so many places. We've got to pay a few bills here. We got the Dow coming back a little bit. 877-927-6648.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to take a look here at the crude oil market. We went up and we matched the highs that we made in early March, which is a very interesting thing because we made sort of a double top. And we'll be able to see if that's going to be a case, if it's going to be a major top or not. It's basically, if you can see from the high we made way back in February, we've made a 786 retracement of that move by just taking the high out of March 3rd by just a few pips, and that was mainly due to, from what I understand from one of my contacts in New York, was there was a lot of emotionalism about Saudi Arabia and Yemen in conflict, but you know, that's so far away in the world that it's I don't think many people even know where Yemen is, but it's in the south end of Saudi Arabia. So anyway, that's what we're watching here. The next one that I wanted to show here is the gasoline futures, because they've been by far the most bullish of any of the oil complex. And after we made the low back in January, the pullback that we made in mid-March around the 13th, and you can see every time I talk, it's always March 13th. That's the importance of that cycle date that I talked about at the beginning of the show. That's a monster date, folks. If we ever go below that in the stock market, closing basis, sayonara, in my opinion. So we'll have to wait and see. The New York Stock Exchange Index has held up well, but we'll see. Anyway, the gasoline futures held at the 382 during this last 8-day rally that we've had. We've gone up to almost the 786 in gasoline futures, and so we'll see if the pullback that we're supposed to get now in this crude oil and some of the other commodities like silver and gold is going to happen. It's still a little too early to tell if that's going to be the case. Now, I wanted to, we've had a request to talk about a little bit about natural gas, and as most people at TFNN know, that is one of my specialties. Okay, let's take a look here, and okay, now as you can see on this natural gas, we had that 135 pattern where you had the higher lows. That was one of the favorite, well, it was the favorite pattern of Roy Longstreet, the great speculator from the 1950s and 60s and 70s and 80s. And now we've gapped down, below those levels, telling us that we are going to be going lower. We should have a situation where we should get down at least to match the lows at 2.55 cubic feet would be my guess, and we'll see what is going to happen to that with the natural gas. One person besides Priceline Charlie has asked me about the price of Priceline and how we're doing with our prediction on that. We'll take a quick look here for them, and then we'll move on to some more commodities just to flavor the punch bowl a little bit. And it looks like we're heading towards the level that we're looking at. We've taken out last week's low, which is the first sign, and that means the ABCD should be moving now, and we should be heading towards $1,100, and we'll be able to take a look at it. So we'll see. Okay, we got our first caller today. That is Bill. Are you there?
Yeah. Hi, Larry.
How are you? What can I do for you?
Fine. The transportation. This is Bill Signorelli, actually. It's been a long time since we talked from Wave.
Oh, my goodness. How are you? Nice talking to you.
Good to hear from you. The transportations, from the Elliott standpoint, are just about ready to take off in a major bull move. And it doubles after completing a triple zigzag from last November. The most we got on the downside is 8,500, and the upside is 10,000. So the overall bearishness of the market that's been happening in the last 10 days is about to come to an end, I believe, and we're about to see a very serious upside move to everything here.
Well, I certainly hope you're correct, because that's what I'd like to see. The transportations have shattered that low of May 13th. We did that yesterday, and then we had some more movement to the downside here. So that's already broken the cycle. Frankly, Bill, if this goes and makes new highs, I'm going to take my hat off to you and mail my hat to you, because I don't see how it can make a new high from here, but I'm wrong a lot. So it's got one of those things that could happen.
The aspect is that the entire world markets are being inflated, and the stocks themselves have become a commodity. The only dividend play in the game is the deflation.
Yeah. Well, thank you for calling in, Bill. I appreciate it. And give us a call if it makes new high. I would like to eat some humble pie, because I don't think that one's got a chance of a snowball in Hades.
Okay. Bye-bye.
Good talking to you, Bill. Have a good year. Okay, we'll be right back with our guest, Shane Smolian, at the break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we're online with our friend and co-author, Shane Smolian. Shane, are you there?
I'm here, Larry. How are you today?
Well, I'm good. And how is the new astrologer in the family? He's about 3 months old now, isn't he?
Yeah, he's doing great.
Little Action Jackson from Discotech. I'm sure you're keeping you really busy.
Oh, absolutely, absolutely.
Listen, the first chart that I've posted in here that you sent me is the lunar cycle chart for 2015. You want to tell the folks what they're looking at here, and then we'll move on to the mountain climber, and then we'll also do the transit. So let's do this one first.
Okay, this is a basic lunar cycle based upon the sun and the moon. So this would be based upon, things that you would see in the sky, such as a new moon or a full moon. And this cycle is the most basic cycle that you can start with. And I like to start with this a lot of the times because no matter what's going on in the market, this is a good oscillator to look at to give you an idea of peaks and troughs. So this cycle actually had a top on March 22nd, which matched the market top pretty good there. The market top was on March 23rd. And it's been declining ever since. And so I think this week has reflected that decline pretty well in this cycle. And it's going to continue down through this week and probably bottoming around April 8th or the 16th, somewhere in there. So I think this is a good place to start when you're looking at anything because, you have these larger term moves going on in the markets, these larger contexts. You got the Fed, you got, the larger trends, the Bradley, all these things going on. But this will always give you a relative sense of some peaks and troughs to play.
Now, you do a lot of work watching the Federal Reserve. In fact, you do it probably better than anyone I've ever met. And what is your feeling about what's going on with the quantitative easing? Do you think it's almost over, or what do you think will happen after, they do finally raise interest rates?
Well, that's kind of an interesting question. I mean, I think eventually they will come back with another round of quantitative easing. And, the market has been doing this rounding top, and we're basically back to where we started when the quantitative easing ended. So we've made about 4 attempts at this top here. We've had a rounding top on, was 4 times. We've been November 26th, December 29th, February 25th, and then the most recent top, it came off that high again. So I think we're basically going nowhere without the Fed. Now, one of the things that people don't really pay attention to that I pay attention to is there's something called securities lending. And the Fed holds these auctions, and they lend securities to banks. And these securities are based upon securities that they purchased with a quantitative easing. And basically what happens with this is that as the markets go down, the Fed will lend more and more of these securities to banks. But the problem is right now that they basically lent out, I think, most of these securities. So if we do have a market decline now, they're not going to be able to stem that fall as they would if we were in the middle of like a quantitative easing cycle. So I think the market's, in short summary, it's vulnerable right here to some declines.
Well, that's really interesting. I have never heard that before, so I'll have to. What was the terminology that you used? Lending? Yeah,
they have these. Okay, the way to describe this is they purchase the bonds with a quantitative easing, but then they have that on their balance sheet. And they'll turn around and they'll lend those out to banks. And they have these auctions that happens like every day. You can look it up on the Federal Reserve website. And I think I put a chart up for you to see. But you can see that they'll lend out, on the highest day, they've lent out up to $33 billion in a day. And right now, they can't lend out more than about $13, maybe $10 billion in a day. So, if the market starts to fall, they can't really do too much right now until they start another round of quantitative easing. So, to me, that's a liquidity issue that's drying up in terms of the Federal Reserve.
This is really good information. Now, the next chart that you've furnished for us is the one called the mountain climber. Do you want to explain to us what you're looking at here?
Yeah, this is a cycle I put together that is based upon it's dealing with the Sun, Saturn, and Kronos, and this gives kind of a longer term cycle through the year with some peaks and troughs. I really like this one because it gives broader peaks and troughs, so it's a lot broader than just the lunar cycle. And it had us having a peak on February 11th. Now, I know the market's been kind of oscillating in a sideways pattern, but it's still falling, and it had a relative top. You look there on about March 23rd, right with this last top in the market. So when we have an agreement like that, like with the lunar cycle and then this one peaking, I like our chances of this decline extending quite a bit from here. Now, how far from here, it's hard to say. But I think without the Fed, it's going to, the market's going to probably have this sideways to lower drift until some action is taken. So I see a bottom on that mountain climber around April 10th. So that corresponds to about April the 8th with the lunar cycle. So they're pretty close. They're both about showing a bottom around that April 8th or April 10th time frame.
That's very good. Now, Shane, when you did the book that we did together, you actually included those lunar cycles as part of the back part of the book, correct? I mean, it's in the I can't even remember what we called it.
What is there's an appendix.
Appendix. There you go. I was trying to think of it. I knew it was something to do with a body part. I couldn't remember.
It goes through 2024. So, when you purchase the book, you'll have all of these dates and these turning points. And we also included the Bradley in there, too. So that's another interesting one, too, because if you go back to the Bradley, that's actually topping around April the 3rd. And we've already started selling off into that. So the Bradley kind of runs flat until about the end of May, and then a final peak around the end of June. So I think that's giving us some hints here. I think the market is starting to show some relative weakness because we're starting to sell off before the Bradley has peaked. I think that's telling us that on a relative basis, the market is weak, and that's important because the context of this is important. If we're in a quantitative easing phase and the bias is positive, you have to look at that context. Right now, we're looking at it in terms of the negative context.
Okay, the next one that we're going to look at here is one of my favorites that you introduced me to, and that's the transit chart for April, May, and June of 2015. This is the one that really shows a lot of highs and lows in the stock market.
Yeah, this is one of my favorite ones to look at. If I just want to get like a quick view of the market in terms of like what is like just a one glance view, I always look at these combined transits. And this is a transit oscillator. This is not a cycle. It's kind of like the Bradley, but it has a lot more information in it. It has all the trans-Neptunians and asteroids. Every possible orbiting point is kind of thrown together here. And that showed a peak maybe early last week, or sorry, end of last week, and it shows a decline all the way through the end of this week. So, you know, all of these cycles are basically agreeing right now that we're in this downtrend, at least for the week. And I think this has a good chance of extending, you know, into the first week of April. You know, and when they agree like this, I really like it. I mean, the transit's bottom actually is Friday, but like I said, the mountain climber and the lunar cycle continue out for a couple more days. So maybe another week or so of this sell-off, and then we'll see if we can get some type of a bottom.
We've had a question from one of our listeners. If you describe what you mean about these combined transits, what is exactly what you're looking at when you use that term?
Okay, well, you know, I think a mistake to make when you're doing any type of astrological forecasting is just to look at one transit. Like, let's say, you know, we might look at Jupiter with Mars or Venus and Jupiter together. This combined transit takes every single possible transit and it assigns it a positive or negative weight. So if they're making a quote-unquote positive angle, like a conjunction, a sextile, a trine, it gives it a positive score. And if it's making a negative one, it gives it a negative score, and they're weighted. So when you throw them all together, you get like the net effect of how everything's interacting. And this one is really interesting because in the big market declines, when we get away from the Federal Reserve, when we get away from this, you know, this artificial markets, these transits have timed market turns down to like almost the hour. I mean, like in the 2011 summer crash, like it pinpointed that turning point almost to the day, like within an hour within the day. So I like this. I like these a lot because you're looking at everything. You're not just looking at one particular transit.
Well, that's good. So you combine it. Do you weight them by any particular weighting, or you just look at them in pairs? Well,
yeah, we weight them like, you know, like you might have like a conjunction will be weighted double, you know, positive, or the square might be weighted a -1, and then, you know, get into the lighter aspects that may be weighted at like a half of a weight. And then, like I said, they'll get a positive and a negative score. So when you're looking at a peak on a chart on these, you know, you're looking at hundreds or thousands of transits that are happening at once, and that's the net effect of what's happening. In other words, there's a net positive. More of them are positive than are negative, and then that tends to correspond with these moves in the equity markets.
Okay. There's one other chart that I wanted to bring up that you had sent to me, and that's also a transit chart that goes through with a different type of a graph. It's more of a smooth graph, and it has green on the top, of course, red on the bottom. Do you want to explain to the folks what you're looking at when you're watching this sidereal graph?
Yeah, this graph, you're talking about the one that goes from March to April?
Yeah, March 11th into April. That's correct.
Yeah. Okay. What this is? Okay. So this chart basically takes out the lunar cycles. So the moon moves very fast, and so it affects us, you know, very quickly because it changes signs every couple of days. So the other graph that I showed you with those ripples, those are including the moon as they move in and out of the cycles. And in this graph, it takes out the moon, so you get like just more of a sweeping view of the outer planets affecting the markets. In other words, those ripples in between on the moon will, if you want to pinpoint a move down to, let's say, the hour, you would put the moon in there. But if you just want to see generally for the day what's happening, you would leave the moon out, and that's what this is. Basically the same thing, but it took out the moon.
Okay, now I know you have we chatted by email, but you have an overall sort of a bearishness coming in for the first time in a very long time. What's your confidence level on this one, Shane, for the overall market?
Let me say this. Overall, I think the market cannot go anywhere without the Fed. And when the market was falling in October, I really thought that's when it was going to go, and it had a really sharp bounce into that November 26th. But really, since that point, the market has gone nowhere. I would be very, very surprised to see the market continue with a rally from here. I think the market, if there's no Fed involved, I think the market's going to at best drift sideways to drift down. And I can't. If the market can do it, it needs to prove it. And it hasn't been able to do it since 2009. I mean, I tell people that all the time. I said, show me one time that the market has been able to rally without the Fed, and it can't. So when I see that, I'll believe it. But until that point, the burden of proof to me is on the market to show me that it can rally. I don't think it can. So I think we got to look at these transits and these cycles in that context.
Wow. Now, if the folks want to reach you, it's www.wolftrader.com, correct?
Wolftrader.net.
Oh, wolftrader.net. That's my correction. Yeah, www.wolftrader.net, and he'll send on some information for you and stuff. And I want to congratulate you on going into the money management. You seem to have struck. Of course, you should, given the knowledge level and your expertise. You've got into money management in a big way, and I'm certainly happy for you. And I know you're going to do a fabulous job for two reasons. One, you study the market so carefully, and you're so risk averse. So yeah, I know that you're going to do very well.
I've been working on this for a while. We're starting a private equity fund, and we're getting our first investors now, and we've been putting this together for years, but we're putting all the pieces together now, and it's very exciting. It's an automated algorithm that we use, and it's very like you said, it's risk averse, and we're only trading with the highest probabilities. Combining daily moves with intraday moves. So we're excited about it, and that's been a big project, and it's finally coming to a head now. So we're getting our first investors, and we'll be looking to go forward with that.
Yeah, you're the only man I know who can squeeze 36 hours into a 24-hour day. Do you ever sleep at all?
Yeah, I mean, I'm getting more this last year. Things are getting a lot better, and with the new Jackson came, the newborn came, so that was we were very relieved about that, and things are falling into place. So
that's good. Well, listen, I want to thank you for having you on, and I hope we can have you on maybe in another month or so when you have some time, and we'll see how things are shaping up, especially maybe after that April 20 end of April time frame that we're looking at here. Maybe you could give us some more information at that time.
Okay, Larry. Thanks for having me.
You bet. This is Shane Smolian of wolftrader.net. He's my co-author on the book. He basically, he did the work. We worked together on what we were going to look at, but he certainly was the one that did all the research with the help of Alfie Lavoie software, the titanium program that they have, which is really good for doing some of these cycles that you're looking at here with transits and things. These were some of the things that Dr. Ruth Miller taught me way back in 1986. She's still recovering from her heart attack at the age of 94, but I did speak with her. She's doing okay. And the second thing she asked me after she was told me she was okay is what my opinion was on soybeans. Can you believe that? You got to love that, folks. There's just no other way to look at it than something as positive as that can be. So we're coming up to a break, I believe, right now, and we're going to come back and we're talking about a few more commodities right after the break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I wanted to bring the chart of the euro up because that's the most actively traded thing in the world, and I wanted to show you what happened today in the euro. We made a higher high by 5 pips than the high we made back on March 18th. Just barely took that out very, very quickly, and now we've sold off well over 150 pips since that time, which tells us that there's some type of a high was made today. That was the exact 61% retracement from the last high that we had in the euro, which went back into the 19th of February. It was perfect to the exact tick, and just taking it out by just a little bit. If you're trading and you see that, boy, pay attention to it. We see it so many times that it's just, I don't know why it is. I guess people put their stops at the exact highs or lows, and it ticks it out by just a little bit and doesn't go anywhere. If the market was really good, it would have blasted through there at least 10 or 15 pips. And the euro is so big that you can't really make any plays with it. I mean, you can't fool around with with it. You can, but you probably get burned if you try. It's just very difficult. I wanted to bring up one other one that looks interesting because we're talking about stocks, and Bill Signorelli called in on the Dow Jones Transportations, but the Dow Jones Utilities here sort of validate what he was saying. I know they're different, but you'll notice that the Dow Jones Utilities made a 61% retracement today and is actually up on the day right now. So that has held that low of March 13th. The key is to watch that closing price of the New York Stock Exchange Index. If we get below that March 13th low, that is going to be very, very badly. Those of you that have been following my show here since 2007 in October, this is the same thing that happened. We bottomed in August. We made that tremendous bottom on August 15th of 2007. We made a new high into October 2 months later, and then we quickly came down and went below that low of August 15th, and then look out. That's when the whole thing started to crumble. We've got that same situation coming right now. Right now we're holding up well. This is one more day of the week. We should hold up given the fact, unless the market melts down today, we should have maybe a modest update tomorrow, recouping some of these losses we've had this week. But it's still Friday in a down week towards the end of the month is not a good thing. So we'll see. If it's a down week in a down month, it usually will close badly on Friday. So we'll have to let the market tell us what it wants to do. But the utility index is held up just like the NYSE has. The transportation is broken down. So we're at critical levels here. I don't think there's any question about it. Shane made a really good point for lows coming into April sometime, which we certainly could see that happen without any trouble at all. And we'll notice if that's going to be the case. We've had a question about the live cattle market. We've talked about that several times. I'll bring up the chart for June cattle because April cattle are already into delivery, and you don't want to get involved with that unless you like to have some cattle delivered. They don't really do that stuff anymore. They warn you so much. You have to be a bona fide hedger in order to take delivery on some of these things. Just a regular speculator is not going to be able to do that. But we'll take a look at this here on the June cattle, and you'll see that we're making a perfect Gartley pattern. It needs to get about 1 point higher, up around 153.5. Right now we're trading at 152 and change. So another point higher in cattle, which we'll look at next week, will tell us that we should be completing this Gartley. It's a perfect ABCD. You've got the AB leg equal to the CD leg in both price and time. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.